Welcome back to the Fintech and Financial Inclusion Executive course. Today is the seventh day where we will demonstrate the Fintech innovation and the startups. The purpose of today is to understand the Fintech startup ecosystem, identify Fintech incubators and accelerators, identify innovation in financial services, recognize emerging Fintech sectors. Let's start with Fintech revolution. Fintech sector revolutionized since 1866 till today, where we have more than four waves in Fintech sector, where Fintech started since 1866, and this is the first wave, which continued until 19th, while we have a foundation of Fintech services founded during this period, where we have some key developments like infrastructure development, transaction and cabling, stock ticker, and ATM. In the second wave that started 1967 till 2008, where we have the digital revolution, we have some key developments such as e-commerce, online banking, internet boom, and PayPal. In the third wave, we experienced the mobile payments, digital wallets, niche financial services, and these sources were in the third wave of Fintech that started in 2008 till today, and we call it the age of the Fintech startup. The Fintech 3.5 started 2014 till today. We describe it as going global and open, where we have finance as a service, open banking APIs, global adoption, embedded finance. In the fourth wave, that we call it decentralization and personalization, which started since 2020 and going forward. The key developments in this wave is blockchain, artificial intelligence, finance, crypto, and personalized finance and sustainability. After the fourth wave, we have the future is unfolding. We have some key developments in this wave, which is metaverse, quantum computing, regulations, and inclusion. Globally, the fintech ecosystem is thriving. The investments in fintech sector are pouring in at record level, following the development of groundbreaking solutions. Emerging markets are witnessing a surge in mobile money and digital wallets, empowering previously unbanked populations. And the established financial hubs are buzzed with activities at established institutions collaborate and compete with the nimble startups. Artificial intelligence, machine learning will provide or will enable the personalized financial experience, will help in automating tedious tasks and empowering users to make smarter decisions. Blockchain technology will help in reshaping the payments, secure the data, and democratize the access to financial tools. Open banking will remove all barriers and foster the collaboration, and it will also create an ecosystem for the interconnected services. The fintech startup ecosystem will have or will support the fintech startups to provide them a quick start where the financial world is sprouting a new breed of ventures. We call them fintech startups. These nimble companies are pushing the boundaries of finance and trying to help innovative financial services. Investment capital is raining down on diversified, innovative financial solutions, and the ecosystem is flourishing globally. Besides that, blockchain technology provide the power for some innovative services like blockchain-based insurance. These startups are tackling financial pain points with fresh perspective. The emerging markets are fertile ground, witnessing mobile money blossom and digital wallets flourishing, bridging the financial gaps for unserved populations. The future promises even richer harvests. The decentralized finance will empower individuals, offering alternatives, lending, and investment opportunities beyond centralized controls. Emerging trends like embedded finance, where financial services are seamlessly integrated into everyday experiences, will blur the lines between traditional banking and fintech. Also, the talents will be the golden fertilizer, fostering diverse teams with expertise in technology, finance, and user experience will be the key for unlocking the full potential of financial services. For the incubators and the accelerators, incubators are programs offer long-term support, often between 6 months to 12 months in the early stages of startup development. These programs provide mentorship, office space, access to resources, and networking opportunities. Incubators generally take smaller, quietly stakes in exchange of their services, while accelerators are programs beyond to provide some intensive and short-term, usually between 3 to 4 months. The aim of these programs is to help existing startups with traction skills. This program is also offering intense mentorship workshops, investor instructions, and seed funding in exchange to larger quietly stacks. For the startups, they have to choose the right program. They need to focus on the programs specializing in fintech to provide your needs. If you have to determine first if your startup is requiring some attention regarding mentors, investors, and partners. You need to consider geographical proximity to industry hubs, financial institutions, and potential investors. You need to research the program success rate in helping startups secure funding, achieve milestones, and exit successfully. Also, startup leaders should understand the program's fees, equity requirements, and potential funding offers. Regarding the mentorship and team, you need to evaluate the expertise and experience of the mentors and the program support network. The top global fintech incubators and accelerators, we have 500 startups fintech. This global network with program in Mountain View and San Francisco. F10 Fintech Incubator and Accelerator is a non-profit focused on fintech, regtech, and insurtech in Switzerland. Barclays Accelerator operates in New York, London, Tel Aviv, and Cape Town. City Accelerator is a global network with labs in the US, Ireland, Israel, and Singapore. Plug and Play Tech Center runs 60 plus accelerators programs for fintech across 35 cities globally. Anthemis Group invests in and supports early stage fintech startups in London. Digital Financial Services Innovation Lab focuses on developing fintech solutions for low income customers in developing countries. In Egypt, there are some incubators and accelerators. The top names or the big names like EFG Hermes Fintech, EV Fintech. It is a powerhouse accelerator and venture capital fund backed by EFG Finance and Egypt Ventures, focuses on scaling early stage fintech ventures. They offer intensive mentorship, seed funding, and access to investors and industry. We have Startup Bootcamp Fintech Cairo, part of Global Network. It provides a 3 months intensive program, contains a curriculum for high potential fintech startups with expert mentorship, funding opportunities, and access to a global network of partners. Flat Six Labs Cairo. This accelerator offers 3 months program with seed funding, office space, and mentorship, supporting startups across various sectors, including fintech, Falak startups, accelerators, posts 2 tracks, one for general tech-enabled startups and another specifically designed for fintech, and they offer mentorship, funding, and networking opportunities to help startups grow and scale. Entrepreneurial is an incubator, provides a supportive environment for early stage startups across various industries, including fintech, and they offer office space, mentorship, training programs, and access to investors. We have also AOC Venture Labs affiliated with American University in Cairo. It is an incubator, provides support to student entrepreneurs, including those in fintech, through workshops, mentorship, and networking opportunities. Mentor Incubator is an incubator focusing on social impact ventures, meant support fintech startups tackling financial inclusions and economic development challenges. They also offer funding, mentorship, and access to their network of partners. The funding options of fintech, we have early stage funding, angel investors. These are individuals who invest their own money in early stage startups. They often provide valuable mentorship and guidance in addition to funding. Seed funding, this type of funding comes from angel investors or venture capital firms and is typically used to validate your business model and build a prototype. Pre-Series A funding, this bridge round between seed and Series A funding, is typically used to further develop your product and gain traction in the market. Grants is a government grants and the competitions can be a great source of non-dilutive funding for fintech startups, particularly those focused on financial inclusion and social impact. There is a growth stage funding starting from Series A funding. This is the first major round of funding from venture capitals. It is used to scale your business and achieve significant market share. Series B and C funding is a subsequent rounds of funding from venture capitals are used to further expand your business and reach a global audience. Debt financing is a bank loans and lines of credit can be a good options for fintech startups with proven business model and strong financials. Convertible notes, these are debt instruments that convert into equity at a later date, often at discount. They can be a good option for startups that need funding and haven't finalized their valuation. The other options of funds like crowdfunding, these are platforms like Kickstarter and Indiegogo allow you to raise money from large pool of individual investors. This can be a good way to validate your idea and build a community around your product. Strategic partnerships, this option is focusing on partnering with established financial institutions can provide you with access to their customer base and resources. This can be a great way to scale your business without raising additional capitals. Initial coin offering or ICOs for blockchain-based fintech startups. ICOs can be a way to raise capital quickly and efficiently. However, ICOs are highly regulated and come with significant risks. We have some success stories and challenges like robo-advisors democratize investing. Companies like Wealthfront and Betterment democratize investing by offering automated low-cost investment management without hefty minimums. They empower individuals to take control of their finances and build wealth previously inaccessible to many. Blockchain takes on payments. RebbleNet revolutionized cross-border payments by leveraging blockchain technology. It offers faster, cheaper, and more secure international transactions, disrupting traditional correspondent banking systems. Microloans empower entrepreneurs. Kiva is a pioneer in peer-to-peer micro-lending, connecting lenders with small business owners in developing countries. This innovative platform provides crucial finance supports and fosters economic development. We have other success stories and challenges such as M-Pesa Kenya, Gcash Philippines, Alipay China, Orange Money West Africa. We have some regulatory hurdles as the fast-paced nature of fintech often outpaces existing regulations, creating compliance headaches and hindering innovation. Regulatory clarity and collaboration are crucial for sustainable growth. There are some cybersecurity threats. While fintech startups are prime targets for cyber attacks, requiring robust security measures to protect sensitive financial data and build trust and ensuring data privacy are paramount for user adoption. Financial inclusion gaps still exist. While some solutions bridge the financial inclusion gap, there are many remain unbanked or underbanked populations, and tailoring the products and services to diverse needs and ensuring affordability are very essentials. We have also competition heats up as the fintech space matures, competition intensifies. Maintaining a competitive edge and differentiating through unique value proposition will be critical for success. We reached the quiz part of today's uh, episode. The first question is asking about what is the main theme of passage about fintech revolution, the challenges faced by traditional financial institutions, the rapid growth and transformative potential of fintech startups, the need of increased regulation in the fintech industry, the negative impact of fintech on financial inclusion. The correct answer is rapid growth and the transformative potential of fintech startups. The next question, which of the following not mentioned as key development in fintech 3? Online banking, mobile payments, digital wallets, niche financial services. The correct answer is online banking, because it is included in fintech 4. What is the main focus of Fintech 4? Expanding access to financial sources in emerging markets, collaboration between fintech startups and established financial institutions, decentralization and personalization of financial experiences, addressing regulatory hurdles within the fintech industry. The correct answer is yes, decentralization and personalization of financial experience. The next question, according to the passage, what is the one of biggest challenges facing the future fintech? Lack of investment capital, limited technological advancements, difficulty scaling existing business models, build trust and addressing data privacy concerns. The correct answer is building trust and addressing data privacy concerns. What is the primary function of incubators and accelerators in fintech startup ecosystem? To invest in promising startups and provide mentorship, to offer financial education and training programs, to provide regulatory guidance and compliance support, to connect startups with potential customers and partners. Okay, to invest in promising startups and provide mentorship. The next question, when choosing an incubator or accelerator program, what should a fintech startup consider? A program location and proximity to industry hubs, the specific focus and expertise of program, the amount of seed funding offered, all of the above. Answer is, thank you, all of the above. Which of the following is not a top Egyptian fintech incubator or accelerator mentioned in passage? Yes, it is Silicon Valley. What is the one of key factors for success for fintech startup in Egyptian ecosystem? It is already here, building strong relationships with local regulators and authorities. Which of the following fund is typically used to validate business model and building prototype in the early stages of fintech startup? Seed funding, bank loan, Series A funding, initial coin offering. Yes, seed funding. What are the two main advantages of angel investors for fintech startups? Leverage investment amounts and global reach, valuable mentorship, mentorship and guidance, in addition to funding, access to extensive marketing and advertising resources, low equity requirements, and flexible repayment terms. Sure, valuable mentorship and guidance in addition to funding. Which funding option is the best suited for fintech startups with a proven business model and strong financials? Convertible notes, crowdfunding, government grant, debt financing. Okay, it is debt financing. What is one of the most important things for fintech startup to do when pitching for funding? Emphasize the potential for high returns on investment, focus on the technical details of the product or services, demonstrate a clear understanding of the target market, highlight the founder's person's experience and expertise. Yes, is the correct answer is to demonstrate a clear understanding of the target market. Which fintech success story is highlighted for its role democratizing investment? Visa, Gcash, Alipay, robo-advisors. The correct answer is robo-advisors. What is the what is one of the main challenges faced fintech startups in terms of data security? This is the last question. Complying with complex international regulations, provide trust with users who are wary of sharing personal data, protecting against cyber attacks and fraud attempts, integrating data platforms with existing financial systems. The correct answer is building trust with users who are wary of sharing personal data. Thank you very much for following us and attending this online session. I will be waiting for you in the next episodes and next days of FinTech and the Financial Inclusion course. See you in the next episodes and goodbye.